Hi there, welcome to Kneppy Invest. I think it's time for a technical update to our favorite company, Brainchip. And when I say favorite company, you either absolutely hate this company or absolutely love it. That's what I seem to read or hear among non-holders and holders of this company. You either think this company is going to be the greatest company in the history of the world, or you think this company will not make a cent or of revenue or even profits because it's all hot air, that sort of thing. I sort of in between the two. I think the potential of Brainchip is significant, and if they just achieve 1/10 of their potential, it will be a much bigger company than it is now. But I don't think that's an absolute. I think there is a lot of risk behind this company. So I would definitely not go all in on Brainchip. I have taken a position. I've also taken some profits, and the share price has pulled back a fair bit from when I took profits. So I actually might add to my position, particularly right now, because the share price and the chart are looking interesting for Brainchip. Looks like the share price decreasing from its high of about $2.30 might have come to an end. And I'll show you why when we look at the chart for Brainchip. But I'll not only feature Brainchip in this video, I'm going to look at about 5, maybe 6 other companies that are looking interesting right now. These are companies that are favorite among retail investors. A few of these companies are favorite among fund managers as well. And all these companies I do either like, have positions in, or have been thinking about taking a position in the future. So let's get stuck into it. But before we have a look at Brainchip, I'm just going to show you what other companies I'll be featuring in this video. So, of course, we'll start off with Brainchip, and then we'll look at PointTerra. I think there is amazing potential for that company as well. Sort of company that I think will show significant operating leverage as they increase their revenue. But there are some risks because there is that potential the company will ramp up their spending. So even if they ramp up their revenue, the company might not be profitable for the next few years. There is that risk right now with Pointerra. They could go another direction and then become highly profitable, highly operating cash flow without increasing their spending. I think that's a definite path for Pointerra. I'm not sure the correct path. I'm going to leave that to management. That's why they get paid the big bucks. Nanosonics, I'm really high on the potential of Nanosonics. Share price of that company has pulled back a fair bit, just like Pointerra has as well. So both Pointerra and Nanosonics, because the share prices have pulled back, both of those companies are looking way more interesting right now than they have been over the past 6 months to 1 year. Bigtincan's share price has been falling, but it looks like the downtrend of that company potentially has come to an end. We need confirmation over the next few trading days. Telstra, a favorite among fund managers. I have heard Telstra being mentioned a lot in podcasts over the past 4 to 6 months. And that's one of the reasons why Telstra share price has been in an uptrend, but it looks like that uptrend has come to an end. We'll have a look at the chart for Telstra. And then finally, Mount Gibson Iron, that company's share price will be highly correlated to iron ore. Iron ore prices have been going up. Mount Gibson Iron ore share price has broken out, and it does look really interesting right now. First company I want to look at is Brainchip, and this is not a fairly long chart. This is a daily chart that only goes back to October of last year. So that's about 5 to 6 months of share price action. And it's really interesting because we did have an uptrend develop between October and January. You can see the share price slowly creeping up. And when I say slowly creeping up, it actually doubled from about 37.5 cents to about 75 cents during that period. So 4-month period where the share price doubled. It only seems like it is creeping up because of what happened during January. But a definite uptrend in the share price during that period. And then we saw the share price really take off during January. But before I talk about January, I just want to mention the period between October and December. The one little negative thing I did find during that period was just a decreasing volume. I would have preferred increasing volume, and that would be telling me the market is getting more excited. But then again, that was towards the end of December, so there would be less trading during that period as well. But then the share price really took off on the January 4 and then just kept on increasing over the next 3 trading weeks. The share price increased from about 75 cents to a high of $2.30. So a nice increase in share price. But I always get nervous when I see the share price exponentially rising like we saw with Brainchip. There always will be a correction. And we saw that correction over the next few trading days after the share price hit its peak, a share price pullback from about $2.30 all the way down to $1.38. There was a little bit of a dead cat bounce, but then the share price has been trailing off over the past few months on decreasing volume, which is something I like to see as well. But as soon as the share price hit that uptrend that developed between October and December of last year, the share price has stopped moving down. In fact, the share price has started to mirror that trend line, which is that dashed trend line. So right now could be an interesting time or good time to take a position in this company if you are bullish about their future. What I like to see right now is one day of trading where we see increased volume and increase in share price like we saw 4th of January. And that could set the stage for the next little bull run in Brainchip's share price. Now I'll have a look at PointTerra, and this is probably not the nicest looking chart for shareholders. The share price of this company has been going down over the past year. So this is the chart from February of last year to current times. And the reason I'm going back to February last year is that was when we saw the share price high for this company. Share price reached a high of over 90 cents during that period. And to be honest with you, even though I do like the future of this company and bullish about the future of the company, the valuations at that point in time were really ridiculous, even though this company is growing strongly. And that set in stage a downtrend in the share price. And I portrayed that downtrend in share price with that dashed slope line from the top left to the bottom right. And the share price has been trading below that trend line for the past year. About 3 or 4 times, actually even more than that, 5 times, the share price has tried to test that uptrend, and the uptrend or downtrend has succeeded. When I say succeeded, it hasn't been broken. And what we're looking for if we're holders of this company is for that downtrend to be broken. So we want the share price to test it, break it, and then confirmed that that downtrend has come to an end. I was a little bit optimistic that a share price of 35 cents would hold. That's that horizontal line at 35 cents or just below 35 cents. We saw the share price reach that in August last year. And then over the next, we'll say 4 or 5 months, the share price remained above that support level. But as the trend line started to get closer and closer to that support level at 35 cents, that was going to be the key. Would the share price go above the trend line or go below the support line? And unfortunately for shareholders, the share price decided to go below that support line. That support line was broken. So now it becomes resistance and the downtrend remained intact. Share price has been going sideways over the last 3 weeks on really low volume compared to historical values we've seen for this company. That could be a good sign that the selling has or potentially is coming to an end. Those who want to sell out could have sold out. I'm actually looking to add to my position because the valuation of this company is becoming more and more attractive as the share price falls. The main thing I want to see right now moving forward, and this is when I'll take a position or potentially take a position or add to my position in this company, is to see the downtrend being broken. That is the most important thing right now for PointTerra moving forward. And hopefully the downtrend will be broken on some really good news from the company. The last 2 charts I've shown you are daily charts. Now I'm going to look at a weekly chart. And in fact, I think the next slide with Telstra, I'm going to look at the monthly chart. So I do look at all sort of timeframes for charts. I look at daily, weekly, monthly. I also look at hourly, 15 minutes. So a whole range of different timeframes when I look at charts. And the reason I'm looking at the weekly chart for Nanosonics is I just want to see what the share price has done over the past 5 to 6 years, just to see where historical resistance and support levels are. And right now, the share price is hovering around 2 significant support and resistance lines. And it actually did move through a support level right above $4. And the reason that was a support level was because the 2 previous lows we saw during the COVID-19 financial panic, and then again in 2019, was right on $4. And the share price pulled through that support level. So that became resistance. But there was another really good support level at a high we saw back in 2018 at just under $3.80. And that support level has held firm. So the share price of this company right now is trading at a 3-year low, which is silly for a company with so much potential that Nanosonics has. I think this company is setting itself up for significant growth over the next decade. So as the share price falls, I become even more excited to add to my position in this company. We've looked at daily charts, weekly charts. Now we get to have a look at our monthly chart. And this is Telstra going all the way back to 2006, not quite 16 years, we'll say 15 and a half years. And the most obvious thing when you look at the monthly Telstra chart is this company always moves in trends. So there actually has been 1, 2, 3, 4, 5, 6 trends in the share price over this period of time. In fact, the longest trend was the uptrend we saw between 2010 and 2015, when the share price went from $2.60 to a high of $6.60. So that was a 5-year uptrend in the share price of this company. So this is definitely not the company you hold for the long term. You just ride the trend. And the trend for Telstra has been up, or had been up, for a period of time, but that uptrend might have been broken. And we'll have a look at the daily chart in the next slide to see why that uptrend has been broken. Maybe not why, but just proving why that uptrend has been broken. But before I talk about the breaking of the uptrend in Telstra's share price, the best time to take a position in Telstra is when the share price gets to $2.60. We've seen $2.60 reached 3 times in the past, back in 2010, 2018, and then recently, although recently the share price didn't quite get to $2.60, it was about $2.70. So that's the time we take a position in this company. And usually that is the time when there's positive, or there is absolute negative sentiment in this company. So this is definitely the sort of company you want to be contrarian about. And that's when you take a position when there's overall negative sentiment in the company. Now onto the daily chart for Telstra, and this is going back to about October 2020. So the low in the share price for this company was in November of that year, so just above $2.60, so about $2.65 was actually the low. That was the time to take position, and that was the start of the uptrend. The next time we saw a low was back in March of 2021. So if I draw a line between the low in November, the next low in March, and if we just continue that line moving forward, we saw the share price reach that uptrend back in October of last year and then move up from it. So that uptrend succeeded, wasn't broken, so it was tested. But then we saw the uptrend tested just towards the start of 2022 in January, and it failed. That was the time the Telstra's uptrend in the share price came to an end, and we have seen the share price just go sideways from there. So even though I did take a position in Telstra because the share price was moving up, I just forgot to sell out. So I probably should have sold out of Telstra because my thesis behind the reason why I bought into this company had come to an end, and there was no reason at that point to keep holding onto this company's shares. Now onto the company which I think is either the worst named company on the ASX or the best named company on the ASX. That is Bigtincan. And the shares of Bigtincan have been in this downward trading channel since September of last year. Really nice to find trading channel as well. Share price has fallen from about $1.50 all the way to a low of 65 cents. So what we're waiting for here is this trading channel to be broken to the upside. And the last trading day of the week, which would have been the 25th of March, the share price increased 10% and went above the top of this trading channel. I would have preferred to see higher volume. That would be fairly bullish signal. And what we need to see over the next few trading days is the share price to not pull back and move back into the trading channel. So this could be sort of a false breakout of the trading channel. So what we need to see is the share price to remain above the top of the trading channel. But a good sign moving forward for Bigtincan, I am a holder of this company. I am fairly bullish about the long-term future of Bigtincan. In fact, they made a really good acquisition way back in September or August last year, and that's why the share price actually reached its high on the back of that acquisition. But the overall negative sentiment in the tech sector has led to a significant decrease in Bigtincan's share price. So it looks like that overall negative sentiment is maybe coming to an end. I'm not absolutely sure about that, but Bigtincan's breakout or potential breakout in the share price Looks pretty good at this point in time. Not confirmed. I'd like some confirmation. And even if it is confirmed, I more than likely will not add to my position because I already have a good position in this company, and I think I will hold this for the long term. Last company we're looking at in this video is Mount Gibson Iron. If you don't know what this company does, it should be fairly obvious in their name. This is an iron ore producer. That's all I know about Mount Gibson Iron. I don't even know where they have operations, but when you just take a position in a company because of technical analysis, you don't have to know anything about what the company does. You don't have to know if they're profitable, non-profitable, that sort of thing. But I probably would like to know some of that stuff in regards to a company. But this is one company where I've taken a position in because of a technical signal, but I still haven't done any research on that company. Some very interesting price points to take note of Mount Gibson Iron, a really good resistance level at $1. Current share price is 62 cents. If I see the share price get towards $1, that could be a sell signal. And if I see the share price break above $1, that would be a good breakout. And the reason why $1 is a really good, powerful resistance level is because 3 times during 2020 and 2021, we saw the share price get to $1 and then pull back and fail to move through that level. Then we saw the iron ore prices take a plunge towards the end of 2021. That's why Mount Gibson Iron share price plunged from $1 all the way to a low of 35 cents. But the share price has been trending up since then, mirroring iron ore prices. And the share price right now at 62 cents is the highest it's been since August of last year when iron ore prices were struggling. The other interesting thing is, among a lot of iron ore producers, is a lot of the iron ore share prices, or a lot of the share prices of these iron ore producers, aren't exactly mirroring iron ore prices. They're actually a little bit back. And I'm really looking at Phoenix as one of these companies. When they release their quarterly report, I think it's going to surprise. I think a lot of investors will be surprised at how good Phoenix quarterly report will be, and that's when the share price might take off. You might want to think about adding your position or taking positions in some of these iron ore companies if iron ore prices remain high or an increase from here, because I don't think the market is quite digesting the possibilities of some really good quarterly results from these companies. That's all I have for this technical update on Brainchip and 5 or 6 other companies, including PointTerra, Nanosonics, Telstra, and Mount Gibson Iron, and Bigtincan. Can't forget one of the worst named or best named companies on the ASX. If you do have an opinion on their name, just leave in the comment section of this video. If you have any thoughts about any other companies I feature in this video, I'd love to hear your opinion, particularly Brainchip. Lots of differing opinions of that company. If you hate that company, if you think it's the worst investment ever, I'd love to hear your opinion. But if you think the sky's the limit for Brainchip and you want us to understand where your thesis is coming from, I'd love to hear your opinion as well. Now, the last thing I should mention is I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a great day. Bye.